We're only about 3,000 more subscribers to 130,000 subs. So how many scars do you think I'd have to wear to do that? Hey everybody, this is LALATE. Hope your evenings are great. This is Evenings LALATE, our 1-hour programming block that starts every night at 6:45 p.m. Pacific Standard Time, that starts with the check and continues to the loan. Really exciting news about EIDL loans overnight, and let me get right to it. There's a lot of you who are getting funded because you're following our advice and you're moving along very, very well. There are others of you who seem to not grasp that EIDL loans is a process and it requires a certain amount of work. Now, I will be answering in tonight's video two major questions which I'm seeing overnight is duplicate entries when they're really not duplicate entries, and the question of collateralization of loans and the ability and the requirement to be to keep documents and to be audited. That came up with an individual on Twitter earlier today. Let me lead with the second one. If you're new to this channel, which I think a lot of you are, because we're adding about 10,000 new subscribers every 48 hours and about 1 million views every day, if you haven't liked and subscribed to this channel, please do. The viewer asked, where is this? I'm very confused about this whole thing about audit and collateral, and it's not clear in the EIDL loan document. Let me explain this to you. And clearly, you know, we've done about a gazillion videos on this, but I haven't done one recently. So I'm going to give you a broad stroke about this. When you go to the EIDL loan document that they offer to you to accept electronically, there is a first provision in the body of the contract and then a separate add-on addendum page or two. In the body of the contract, it says you are not subject to certain things if you are under $25,000, if you're $25,000 or less. So it's basically saying, hey, ignore the attachment to this agreement if you're $25,000 or less. If you're over $25,000, meaning $25,000 and $1, you trigger everything else that's in this separate document, which you have to sign and you have to agree to its terms and put your name on it. If you don't, they don't give you the loan. What that document tees up is collateralization and all these additional obligations of what SBA can and cannot do against you. Those are not teed up if you take less than that amount. When we did collateralization videos back in May and June, we said, hey, here's what you have to be concerned about if you don't want to be collateralized. This is the scenario of collateralization. Do you want to do this? If you don't, then reduce your loan offer under $25,000. And we always use the number $24,900. It became a running joke because everyone was telling SBA I want $24,900, which is like, you had to have believed that that SBA was like, who's giving them this number? It's the same number every single day. You know, Blaine, what's going on here? And it was literally that. Everyone was using $24,900. Now, that was then. The pandemic was a different situation then. Now some viewers are coming back and saying, I need more money to survive into January. This pandemic is really beating me up. It's going on and on and on. So now they're going to increase their loan offer. More about that right now. To increase your loan that is fully funded, you need to email Recon. They're doing loan increases inside of Recon. You have to go through the entire process and you have to basically ask for more money if you qualify based upon their calculation. What is their calculation? It's revenue, 2019 revenue minus cost of goods sold divided by 2. The number appears on your 2019 return, line 1 and line 2. Again, gross rev minus cost of goods sold divided by 2. That's the loan amount they can loan you to. So back to this collateralization issue. So these people did not want to be collateralized back in May and June, who are the bread and butter of this channel, because I told them, hey, this is the collateralization scenario. But a lot of new viewers, I guess, are new and never saw that video and say, oh, I want, $200,000 loan. I want $150,000 loan. I want this. So let me make this video for you, give you this disclaimer right now of what you're getting into. Collateralization means they can take basically whatever operates your business. So what is included in your business is whatever equipment your business owns, whatever assets your business owns, whatever receivables your business owns, and similar. So for example, if you're an accountant, they can take the chair, the computer, the desk, they can take the bank account. And then if you have clients that have outstanding debts to you, they can take that as well. If you're a truck driver and the truck is owned by the business, they can take the truck. If you're an Uber or Lyft driver and the loan is in your name personally and the car is in your name, they can take the car. Now, they're not going to just come and take a thing, right out of the bat. But how does this work? Well, this is ultimately the scenario if you think you're potential to be in default anytime in the next 35 years. I know, you're like, I don't know what's going to happen in 35 years, LLA. I mean, maybe you'll still be wearing purple shirts and the Easter Bunny will come out to be real. Lori, that's not happening. But no, I mean, it's, do you know whether or not you might be in default in the next 35 years? If you think it's not a scenario, then, this is not applicable to you. But if you're a little bit concerned about it, then understand that they can do that. Now, the viewer also asked me, well, how about this bookkeeping thing? Yes, you have to keep books. And because they can call the books when you're collateralized, meaning they have to see what you're spending the money on. So this viewer said, hey, I'm paraphrasing the viewer, that the viewer said, hey, I want to spend the money to build my business and buy things up and, buy up competitors and grow the business. Oh, no, that you can't do that. That's not for this loan. Now they have other SBA loans, I think, that do that, but not this loan. So if you do that, and then they audit you and they see they spent the money on it, what they can do is call the loan, which means, let's say you have $100,000 left on the loan. They'll say, knock, knock, pay us $100,000 within 5 days or 10 days or whatever time frame they say. Pay us that, and then we're going to also charge you a penalty. Yeah, it's not a good thing. It's not a good thing. So if you can follow rules, you're fine. But if you have a problem following rules and you're collateralized, it is so not fine. That's that. Next, the issue about repayment. So a lot of viewers often say, I'm just going to repay it back. I'm fine. And I'm going to repay it back. And they won't be able to take anything because I'll be under the collateralization. No. That's a common misconception. The common misconception is if you take money over the collateralization threshold, you're in the collateralization zone, you take $50,000, you're collateralized, and then you say, you know what, I'm going to give back $40,000, so I only have $10,000 left. I'm no longer collateralized. That's not how it works. You're still collateralized for that $10,000. So if you default on $1,000, they can come knocking. Now, I'm not saying they will, but you can't get out of collateralization by giving the money, by repaying the money early. You can't get out of collateralization by repaying the money early. Next, this is on the same, in the same mindset. If you have the money now, you have a $50,000 loan, for example, you have the $50,000 in your bank account, you're watching this video, you're like, damn it, like, honey, we have a problem. We gotta get this money back. I don't want to be collateralized. I'm watching this kid LLA. I don't want to be collateralized. And then you're like, I have an idea. Let's just give back half of the money and then we're under the collateralization. We just got the money like yesterday. We're fine. No, you're not fine. That's not how it works. You can't literally give the money back to be out of collateralization, you can't, even if you've not got to the money and you've signed the contract. Let's say you sign a contract for $50,000. You haven't gotten the money. You can't say, let's just change the number. Let's, drop it. There's a lot of things that I've seen with EIDL and SBA and Javita and her scars over all these months, which is all 3 months. It seems like it's 20 years now, but it's 3 months. That is one that I've never, ever, ever seen approved. So, if I've never seen it approved, and after thousands and thousands of comments, I don't know, it could be like 800,000 comments, because it's like, 1,000 comments a day times 90 days. That's a lot of comments. I've never heard a viewer get it done. It has always been denied. To ask for a loan to be decreased after it's funded. You cannot decrease a loan after it's funded. You can decrease a loan before you accept it. Can you decrease a loan after you accept it but before it's funded? I have also seen a flat no to that as well. So a lot of, a lot of like, oh, damn, what am I going to do here? Yes, if you don't like this whole collateralization theory situation, think about what you're involving yourself with. Ultimately, it's your decision. Ultimately, you know whether you can make the payments. Ultimately, you know whether or not there's anything that they can take that's really you worry about. If there's nothing, you worry about, they can take the damn chair. Go take my damn chair. I don't care about my chair. Honey, can they take our chair? Do you really care about that chair? No, just take the darn chair. Then you don't need to worry about it. But if you're a truck driver and you got a $200,000 18-wheeler, I don't know how much 18-wheelers cost. I'm just saying that, just maybe they're $250 million. I don't know how much an 18-wheeler is, and that's part of the company that owns the loan. Boy, you better pay that loan. Better not miss payments, because there are lending agencies. A lending agency, they deal with people all the time that default on loans, and I got to tell you, I got to warn you, there's a lot of people who have gotten this EIDL loan, maybe some people that should not have gotten it, and I fully expect in a year from now we're going to hear news stories about SBA suing this person, SBA suing those people, of people who aren't making payments on their loans, that just sort of took the money and ran for it. So don't be surprised if SBA is not teeing up to deal with people who don't pay loans. There you go. What else? Next, hustling. It's so important to understand that if you have the following situation, you've been told by SBA that you have duplicate applications. You don't have duplicate applications. They're different businesses. They messed up the EINs. They messed up the social security numbers. It's important to know that you have to hustle. And I got to tell you, I saw it in the comments yesterday, and someone like resonated what I said to them. This channel was based upon hustlers who got through very, very bad times, got out of vortexes by hustling based upon my motivation, my inspiration, and my guidance and my information to them. No one got to where they are today winning by doing nothing. And so a lot of the newer viewers think that they can literally do nothing and just write an email and a magic wand is going to wave across them and they're going to get a nice fat loan. It's not going to happen, because ultimately SBA, while streamlined better, their computer systems are better, the funding is done faster, everything is done faster. There are situations in which you're going to get stuck. Your application is going to get stuck, not you, but your application is going to get stuck. And when those situations happen, you can't just assume it's so simple that you just write an email. I got to tell you, this channel launched on April 25th or April 26th. And one of my kindest, nicest viewers is a Indian restaurant in Las Vegas. I detailed them twice this weekend. They got their loan approved this week. You know when they applied for their loan? Take a guess. No, not April, not May, not June, mid-March. They have been with me. Well, their fight to get their loan pre-exists this channel. They have been fighting to get their loan, going through hoops and hurdles since mid-March. They have done everything they were supposed to do, and they finally got out on the end. That's struggle, and it takes a struggle to get a loan approved sometimes. So a lot of you are like, I wrote an email, the person didn't respond back to me and didn't give me a loan. Well, you need to do a little bit more. Ultimately, doing more is getting in the private. It's in the description of the video below. Going into the private, you'll get an invite to go to the private. When you get that invite, it'll send you a link to an Instagram page to read Please read that Instagram page that you were sent the link from so you understand how this all works before just thinking things are just magic wands, because there is no magic wand. Ultimately, you need to work for things. And if you do, you'll get exactly what you want. Your business will be on the other side. You'll get fully funded. You'll get exactly what you need, exactly how you want it, and when you want it, and you'll be very, very, very happy. There's nothing more than I feel inherent and clear in my existence is when people are happy that they got their loan and it's exactly what their business needed. I can literally feel their energy of excitement. And that's what you have to really aspire for. And you can do it. Join me tomorrow morning at 8:30 a.m. Pacific Standard Time for Mornings LA Late. Boy, great weekend. As always, stay informed, I almost said stay smoking. Stay smoking hot. The Easter Bunny loves you. And stay of LA for more.